Let's bring in Adam Sieminski from Deutsche Bank. We wanted to take your academics and find somebody that just tackles the day-to-day grind of this. Adam Sieminski, what does Daniel Yergin's work mean to you? You are a guru, you are an expert. When you first read the prize and now the quest, how does this fit into oil strategy and oil economics?
So, Tom, it's great to be with you and Dan Yergin. And in terms of what it means, Dan has a unique and terrific ability to put everything into perspective. I think what he was saying in the quest is that sustainability, security, and affordability in energy are the three keys to keeping the global economy on course and everybody happy. And it's really fascinating to explore all of that.
Nice book review. Shameless plug. Adam Sieminski. Let's bring up a production chart.
Thank you, Adam.
Let's bring up a production chart here. I made this up. I don't like a lot of lines on a chart, but it's the quest, finally, U.S. oil production. The yellow is oil production in the Middle East, normalized back 15 years. Glasses are okay in the show, Dan. You can put your glasses on. The white line is Canada. The blue line is the United States. This is normalized production back a zillion years. I'm focused on the lower right corner, the new increased oil production in the United States. Adam Sieminski, how important is North Dakota, and are we more energy independent today?
Oh yeah, this is really helping, and it's and we I think really want to get into this one, Tom. North Dakota oil production is over 450,000 barrels a day now. Just 5 years ago, it was below 100,000 barrels a day. This is a huge improvement. North Dakota's got one of the lowest unemployment rates in the entire United States. This is jobs, it's energy security, and I think Dan can tell you, and it'd be interesting to hear his views on this. The key to getting this done is to develop the oil prudently and responsibly. And Dan was just involved, along with me, in a big report from the National Petroleum Council that was trying to outline exactly how we could do that.
And this is the sense that the Russians take it out of the ground too quickly, and we shouldn't do that.
Well, there's that question, but it's really responding to the kind of protests over shale gas and development in general. And so what Adam's referring to was a study that we did for the Secretary of Energy. We released it last week, and the basic argument is that much more optimistic about the supply base. The word surprisingly keeps occurring in this study because of what Adam has just described, but that it has to be done in a sound way that meets public acceptance, but that we have a tremendous opportunity here.
My daughter emailed me, one of her friends is protesting this pipeline coming down from Canada. What are they protesting?
Well, they're protesting a pipeline that would bring more of the oil sands liquids down into the United States and down farther into the country and get it distributed more widely. You know, it's a sort of absurd situation. You have the supply there, but it gets bottled up. You have supply in North Dakota, it gets bottled up. And so you need pipelines to move it around. This is rather than oil tankers coming from the Middle East.
A question for Adam Sieminski, if you would.
Well, Adam, I'd like to ask you about, you know, as you're looking at you look so carefully at the overall economy and its effect on commodity markets. What do you see in what's happening in China and the current impact on the oil price?
Yeah, so Dan, the big issue with China, I think, is the extent to which the slowdown in Europe and the United States is going to impact their exports. China can't keep growing at the tremendous rate that it's been doing if they don't have customers. And we're very concerned about the overall rate of growth in the global economy. You know, the International Monetary Fund just came out yesterday and cut its growth forecast for the world for next year from 4.5% down to 4%. About a month ago, Deutsche Bank cut its numbers from 4.4% down to 3.7, 3.8. So we're a bit more worried even than the IMF is about where things are going. Now, at that level, 3.7%, that's not too bad in a historical perspective, but it's a lot slower than what many economists were looking for just a few weeks ago. And that has brought oil demand forecasts down from growing at 1.6 or 1.7 million barrels a day next year down closer to 1.2 or 1.3. So it's starting to show up in oil demand and in other commodities like copper.
Let's bring up the number, if we could, here as we leave Adam Sieminski. This, I think, is one of the great insights in your book, Dan. Here it is, the number for the day. You can see it down here, Dr. Yergin. 14 barrels per day in the developed world, 3 barrels in developing world. Adam Sieminski, where are we going to find the oil for the resurgent and new developing world? Where's that going to come from?
Well, just to follow up on that point you just made, Tom, if everybody in China ended up using oil at the same rate that we do in the United States, demand in China alone would go to 90 million barrels a day, which is the entire world oil supply right now.
And we know that won't happen.
Yeah.
And it can't
right,
happen.
we know that's not going to happen. So, I mean, again, you got to come back to kind of what are the big themes here. And Dan talked about this in his book. First of all, we need to make a lot of progress in efficiency. It's one of the easiest ways to improve the supply and demand balance for energy is to use less of it without impacting people's lifestyles. The other thing that is really critically important, and we're seeing some of this, is to get technological breakthroughs in how we produce and use energy. Sort of like the shale revolution and what's been going on with oil production out in the mid-continent of the U.S.
Adam Sieminski, thank you so much for joining us today as we look at Daniel Yergin's The Quest.